Hey everyone, welcome back to Corporate Decoder. Today we're diving into a community health systems proxy statement. It's like their annual shareholder meeting invite, but way more juicy. We'll decode what's up for a vote, executive pay, and if this hospital chain is on a healthy track or needs a serious dose of something stronger. It might even be a little boring. First, it's a notice that the annual meeting is set for May of 2025. Stockholders get to vote on some key decisions. Important topics will be talked about and voted on, things that impact the company in the years to come. The first big item is electing 14 directors to the board. These are the people who guide the company, so it's a pretty important decision. Each director serves for just 1-year terms. Next, there's an advisory vote on executive pay. This means shareholders get to give their opinion on how much the top executives are making. It's non-binding, meaning the board doesn't have to change anything, but they usually listen to what the shareholders think. They're also asking for approval to update their stock option and award plan. Basically, this means they want to make more shares available for employees, directors, and consultants. It's a tool they use to attract and keep talent. Here's a bit of legal maneuvering. They want to amend their corporate charter to protect their officers from certain kinds of lawsuits, but it would only be effective to the extent that Delaware law permits it. Finally, shareholders get to ratify or confirm the choice of Deloitte & Touche as their independent accounting firm for the year. This firm makes sure the numbers are legit. Now, let's dive into the numbers. The proxy statement highlights the 2024 financial performance. It was a tough year with some lingering problems, but the company saw patient volumes increase. Net operating revenues were $12.6 billion, about 1.2% better than the previous year. The company was also successful in managing labor costs. They're working on getting their debt situation under control. They refinanced some debt, pushing out maturity dates and trying to take advantage of discounts. Here's a quick look at the important numbers. Net operating revenues, that revenue number we talked about, went up a bit. Adjusted EBITDA, which is a measure of profitability, also went up. This is good, but the loss per share, not great. It went way up. To compare, adjusted EBITDA was $1.34 billion in 2024. That's a 6% increase. But net loss was over $500 million. That's quite a bit, and a 28% increase. It's a complex situation. Revenue is up, and so is profitability, but losses are increasing too. Next up is a look at the board of directors. This section gives backgrounds on each nominee. It's a mix of folks with experience in healthcare, finance, law, and even the military. Take Susan Brooks, for example. She's a former congresswoman and US attorney. You can bet she has a good handle on government regulations. Or look at General Ronald Burgess, retired from the army. Cybersecurity is a big deal in healthcare, and he knows his stuff. And John Clerico, the independent lead director who has the position of chairman and also used to be a CEO. Scrolling down a little bit more, there is a table of all the nominees and descriptions of each. Here's where the company talks about their corporate governance. It's like a report card on how well they're running the company. Annual elections of directors, independent board members. They mention how they are doing it right. They also limit how many other boards their directors can serve on. They have to be focused. Now let's look at executive compensation. What do the executives take home in pay? The company says they value stockholder input and make changes based on feedback. Always good to show you're listening. The main idea is pay for performance. Executives get rewarded for doing well, and they list a few factors. For example, they mention that their chief executive officer received 108% of his target cash incentive award for 2024, so a little above expectations. They also like to use long-term incentives such as performance-based stock to align with shareholders' values. Here's a pie chart showing how the executive pay is split up. About 80% of CEO pay is at risk dependent on company performance. They believe that at-risk compensation focuses our management on achieving our key financial, strategic, and business goals. Here's how the board recommends you vote. They want you to elect all their director nominees, to approve executive compensation, to approve the stock plan, and to ratify the accounting firm. This is more generic information, for example, how to communicate with the board of directors or how they oversee risk. It also lists the members of the board standing committees such as audit and compliance, compensation and governance and nominating. Then it talks about how the directors are chosen. Finally, there are some voting instructions if you're a shareholder tab. That's it for today's proxy statement deep dive. Overall, the company seems to have improved in several metrics. they're working to get their debt under control and also have some plans to achieve profitability. Now, here's my 2 cents. The executives are getting paid pretty well, but that pay is dependent on whether or not the company performs well. So it seems to me that the people in charge will do their best to achieve results. I would rate this company as neutral, with a slight lean toward positive in the coming years. Means for thanks for das Tankshiv results. I would rate this company as neutral, with a slight lean toward positive in the coming years. For thanks for watching. If you found this helpful, hit the like button and subscribe to stay tuned for more in-depth corporate analysis. Let me know in the comments what companies you want me to look at next.